Well, hello everyone. How is everybody doing today here? It is August 6th, 2026. I'm here today taking a look at the market so far today. Pretty good action. So far today, it's 10:20 a.m. Eastern Standard Time. So we're a little just under an hour um, into the trading day, and and uh, and yeah, you can see me better. And so far today, taking a look at the tape action, we have the S&Ps, the S&P 500 is up by 16 points today. And we have the NASDAQ. Wow. It is, as I speak, it is up 34 handles today, 34 points today. That's pretty interesting and sticks out today because, as I'm speaking, and the NASDAQ's up 24, 25 points today. That's that sticks out to me because if we take a look at the intraday chart on the NASDAQ, as we can see here, we started the Thursday trading session here at 29,600. And as the overnight session went on, we went from trading at 29,600 down to 29,500. And by 7 o'clock this morning, we were down to 29,400 and actually below 29,400. As we went into the opening bell, we were below 29,300 on the NASDAQ 100. We were down by close to about 1% on the day. And as I'm speaking now, we have the NASDAQ at 29,660, up 46 points today. Now 49 points, up now 50 points on the day. And we are ripping up to the upside on the NASDAQ. So what is behind the tape action today? And the one stock that sticks out to me, looking at the various symbols on my watch list, the one stock that sticks out to me today that is the driver behind the tape action, the selling off in the morning and now this rip higher, is SanDisk. SanDisk. Now, as you can see, SanDisk is still down on the day, down about 4.5% on the day, down by about 60 points today. 4.5% lower on the day. But SanDisk did have earnings yesterday. And let me see here. SanDisk had earnings yesterday, and the stock sold off in after hours after reporting earnings, and since the opening bell, SanDisk has rallied from trading at 11.61 a share and is now, as we speak, trading at 12.91 a share. So it was down by a lot more earlier this morning in the pre-market, and when the opening bell went off, SanDisk was trading down by around 11.80 a share, and now it's bouncing back, as you can see. So that is a stock that is the main driver behind the market activity today. Now, we can also take a look at a few other stocks in the semiconductor area. A stock that is very closely tied to SanDisk is Micron. It trades in lockstep with SanDisk. SanDisk is in the memory storage space. Micron is in the random access memory, high bandwidth memory space, but they trade in lockstep with each other. And as you can see here, taking a look at the Micron chart intraday here, Micron opened down this morning, down at about $840 a share. Traded down to below 830. Actually traded down to, let's see, the low on this bar was $827 a share, everyone. So we traded down to $827 a share on Micron. And I personally follow Micron a lot closer because I own the stock. So I watch SanDisk too, but I follow Micron very closely when I'm looking at these semiconductor stocks. So Micron traded down to $827 a share, and has since rallied along with Micron, and is now trading at $896 a share, $897 a share, and is trading up on the day after trading down very big on the day, and is now trading up on the day by close to $2 to $3 a share, and up by about 0.2% on the day. So it's something to see Micron up on the day. Another stock that is trading making big moves on the day is Western Digital. Western Digital is just like Micron, and they had earnings yesterday as well, and that stock opened down big on the day, traded down to below $410 a share, and is now bouncing back and trading at $459 to $460 a share as I speak. But Western Digital is still down by over 11% on the day. So even though you have a nice bounce back in a stock like Western Digital is still down on the day, and so is SanDisk, down SanDisk is down close to 6% on the day, and Western Digital is down by over 11% on the day. So that still has an effect. So the fact that a stock like Micron is actually up on the day, that is very, very constructive tape action and good to see. Another stock that is sticking out to me so far this morning is AMD. As you can see here, AMD had earnings Tuesday after the bell, and basically they beat on earnings. They had a fantastic earnings report. They had a great EPS, and they had great revenue, but they increased their CapEx by 3 times. And when you increase your capital expenditures by 3 times from before, that is not good news for Wall Street, and that is why AMD sold off from $522 a share down to $483 a share, and the stock actually It gapped down yesterday at $483 a share. Had a little tried to rally, but then sold off again throughout the morning and basically traded sideways for the rest of the day. And today it is attempting to rally. And even though it opened down today, it is attempting to rally, and it's at $488 a share, trading higher by close to $6 on the day, up by 1.3%. So that's good to see with AMD. The other interesting thing today that I'm seeing is how the rotation in various stocks is playing out. I'm starting to see, like, over time, we've had lots of rotations happen throughout the market over the course of the past couple months. And right now, we're seeing money come back into the, I guess, the old-fashioned tech names. And I have to actually do some trades here. I have some calls in the video, and in the video, it was acting very strongly. It was trading higher yesterday, as you can see here. It was trading higher the day before and the day before that, and just over the past couple minutes, it's starting to run out of steam. The stock is just up barely on the day, and I have some calls, and these calls have been rolling and making money on these calls, and starting to run. I just looking at the tape action and thinking out loud here on camera. You can see that the stock's kind of reversed here, and I need to sell these calls. This is just a quick decision. I may get back into these calls later today, but for now, I want to get out of them as the stock is kind of burning out the midnight oil here. It's kind of just it's running out of steam. The stock is just running out of steam right here. So, I'm going to sell these calls to close and get out. The calls that I'm selling are these calls right here, the August 10th, 225 calls. So I bought these calls right here a couple days ago. I originally bought like the 190s, and those made money, and I rolled them up to just slightly out of the money. And now the stock is kind of running out of steam here. So I'm taking some profits and getting out. The calls that I rolled up to are now losing some money, so I'm just no. But I think that NVIDIA can turn around, and I may get back in and try this trade again later today. But There's nothing wrong with like rolling an option and seeing if it sticks and seeing if you can make money. And if it kind of burns out, you know, take your profits, take your money off the table, and then go back in. Maybe watch the stock for about an hour or two and then go back in. Because remember, in the olden days, you had to deal with the pattern day trader rule. There's nothing wrong now with like kind of dealing with kind of putting out a feeler trade, okay? Buying maybe one contract and putting on a trade just to see how you feel, how the market feels. And maybe you make a little bit of money, lose a little bit of money, and close the trade and watch the stock for, 30 minutes, maybe an hour. See how the market reacts, see how the stock reacts, and go back in and try it again with another contract. And if you feel better in the next trade, and the market kind of works better, go back in and then you buy another contract and another contract. You start to size up if the market is feeling better. And over time, the more you watch the market, the more you'll get a feel for the market. And I think personally, going in and doing those feeler trades, small size, just to see how the market is reacting. You can do that now with not having to deal with the pattern day trading rule. And you can go in with like one contract just to see how that contract reacts and see how the underlying stock reacts. And if it goes in your favor, you can always put on another contract and another contract. So if like 4 or 5 contracts is your normal size, put on one contract to see if it works, and then put on another contract and another contract if it works, and you want to size up and go for the trade. So that's what I kind of feel like I'm going to do with NVIDIA. Now, like I said, I took off the contracts that I rolled yesterday, and I want to go back in. I want to go back in. I want to put on some calls again. But as I'm speaking, NVIDIA is now down. And this rotation that we have seen in this stock like NVIDIA over the past couple of days, the stock was at 192, and it has had a run over the past couple of days up to $223 a share, and just over the past couple, over the past hour or so, it's pulled back from 223 a share down to 219. So this is a meaningful pullback, but this is the first real pullback that it's had, in the past couple of days. Every pullback that it's had has been bought, and I think this pullback can also be bought. But I want to see it start to get bought first, and just keep an eye on it to see what happens. I have no clue what's going to happen, but it makes sense that a stock like NVIDIA right now, when it's having this nice run high over the past couple of days, has a pullback. But I want to see like some buyers start to step in, and then I'll put on a new trade. But let's take a look at a bigger picture longer time frame chart in NVIDIA, and as you can see here, it it's having a very nice run from this 190, 191 level. It's traded in a sideways range for quite some time, going all the way back to April, and tried to break out to the upside, traded up to $236 a share in early May. It really had, made a decent effort to have a clean breakout, but that did not happen. The stock has pulled back inside of its previous range here, below 211 to 215 area here, and then back and forth, testing the lower Bollinger Bands, and now is making another attempt to make a run to the upside. And I think that this is some good tape action, and I think that it can continue to go higher. So I'm really hoping that as I speak, it has an intraday pullback that I just showed you. I'm really hoping that it gets bought. Having an intraday pullback is fine. There's nothing wrong with that. But so seeing a pullback like this down to like 219 or so is very healthy and fine. I want it to get bought, and so I'm really hoping that it gets bought here as I'm watching the video here. And as you can see here, you look at the weekly chart here, going back over the past couple of years, and it had the failed breakout is very clear on the weekly chart. It pulled back to the 20-week moving average, and now it's trying to make another attempt, another run back towards its previous high. And I think that is where we are in the big grand scheme of things. I think that NVIDIA is trying to make this run up and retest these previous swing highs that it had, or not just swing highs, but all-time highs that it had at $236 a share. So I think for the short term, $236 a share is a reasonable upside target for NVIDIA to achieve as it goes into earnings. It's having earnings in a couple weeks, as NVIDIA is at the end of earnings season. So in previous earnings cycles over the past year or two, NVIDIA has run up into earnings and then sells off, and that's what we've been getting. That's what you get: this run up into earnings and a sell off, run up into earnings and a sell off, a run up into earnings and a sell off, and that's what we're doing right now. We're running up into earnings. Do we have a sell off, or do we have some type of clean break out to the upside and see what happens from there? But right now, at this point, after the recent sell-off we just had with oh gosh, what's this guy's what's his name? I can't believe I'm drawing a blank here. His first name is Leopold, but I'm trying to think, what was the name of his fund? I'm just going to type in Leopold and see what comes up. Yeah. So his name is Leopold Aschenbrenner, and his fund's name was Situational Awareness. And this is an interesting topic that people were talking about. The guy evidently worked at worked at the at at 1 sec. Um, so he worked at so this guy Leopold Astron Brenner worked at Anthropic, and he wrote a paper, a blog actually, called Situational Awareness, and he published this blog, and he was a big advocate for the whole AI thing, and saying that AI is going to take over the world, and we need to invest in AI and all. And he used that blog to basically raise capital and start a hedge fund. And his entire hedge fund was all invested in AI stocks, and on top of investing in all AI stocks, mostly hardware AI stocks, specifically like the memory stocks and like Micron, SanDisk, and all those different types of memory and hardware names that have been running up over the past year. I think Western Digital is in that group he owned. He also owned a stock like NVIDIA and Microsoft and so forth. And he owned private shares in Anthropic. Now, Anthropic that runs Claude, it is it's a private company. It's not traded on the public stock exchanges. So he owns a lot of that Anthropic, and since he used to work there, he owned that Anthropic in the private markets. But he owned a lot of public AI tech companies, like I just mentioned, like Micron, Western Digital, and so forth, and SanDisk, and different companies like that. And he also owns some NVIDIA as well, and other stocks like that. And he, it's one thing to own all these stocks and to be bullish and all, and write your little blog called Situational Awareness, and raise money and buy more stocks in NVIDIA and Amazon, and Micron and Western Digital, and SanDisk, and so on and so forth. Everybody's doing that. And it's good when you can write a blog and you can get other people's money and you can buy more shares of those companies. That's all fine and dandy. But what this Leopold guy does is he goes to the banks, and he worked at Anthropic. He has an IQ of like 160 or whatever. He's really smart, and he shows that he can get people. He shows to these bankers that he's really smart by saying, "Oh, I raised this money and I have this blog and I worked at Anthropic and I have a 150 or 160 IQ. I'm really smart. So you guys need to give me leverage. You need to leverage so I can leverage my accounts up, leverage my funds up." And I think he was leveraging by at least 3.5 to 1, probably over 4 to 1. So he was leveraged by 4x. So when you have a portfolio that's leveraged by 4x, and you have stocks that are going up 60, 70, 80, 90, 100% or more, it makes sense that you're going to get, as all those stocks go up, you're going to get returns of over 400%. And let me make sure I get the details correct, but I think Situational Awareness Hedge Fund started out with about 100 to 150 million, and the fund over the course of like 2 or 3 years went up to being worth like 20 to 25 billion. And his returns year to date, up to June, through June of 2026, was over 400%. I think by at the end of June, his fund was up 432% year to date. And that makes sense. You think about it, you have a portfolio of stocks, and these stocks are up by anywhere from 60% to over 300%. You average all that together, and you're leveraged 4 to 1. Yeah, that's about a 400% return. So then July comes, and you get some selling in the Korean markets. And in South Korea, that's where SK Hynix is based, and that's where Samsung is based. And everybody in South Korea, all these retail investors, are leveraging up their accounts and buying shares in SK Hynix and Samsung. Well, SK Hynix starts trading in the public markets in the United States, and just before that, SpaceX starts trading, and you get kind of this, very frothy, extended market, very bubbly. Okay, I hate saying that term, but that's exactly what happened. The markets got super extended, and you started getting some margin calls in South Korea. You get the memory stocks start to sell off, and it starts out, it's nothing crazy. It's just a normal, natural correction, a normal, natural sell-off. But then it starts to pick up steam. And if you're running a hedge fund of $15 to $20 billion, and you're leveraged 4 to 1, and you give back, you were up 400%, and these stocks sell off. They have 2 or 3 days where they're down, 10%, 15%. Well, guess what? You suddenly become where you're only up 100% year to date. And these stocks sell off a little more. Guess what? All your gains are wiped out in a very short period of time. And that's exactly what happened. And then they started selling, and the selling begins more selling, and it creates a snowball effect. And then you got margin calls, and next thing you know, the fund is down, 40, 50, 60, 70% on the year after being up over 400% on the year. And that's causing more selling and causing more selling. And then Big Daddy Ken Griffin, Kenny G, comes in and buys the fund, and that stops the selling. But that was when the market sold off. When the market had a big, the big selling over the past couple of weeks. Let's take a look at the Nasdaq here. This selling here, that was from the sell-off in South Korea and the situational awareness fund blowing up. And Big Daddy Kenny G from Citadel comes in and buys the book, and then that kind of stuff stops the selling, and the market has bounced back. And we can also see it here. Let's take a look at the S&P 500 here. It wasn't as big of an effect on the S&P as it was on the Nasdaq. And as I'm speaking here, telling you guys about situational awareness, let's take a quick look at NVIDIA. Multitasking, everyone. Multitasking. Okay, let's take a look at that. NVIDIA, it is up. So it's up 15 cents, 13 cents. Getting some green on the screen here. We're getting some green bars. Now, back to the earlier conversation that we were having. We're going to jump back to the conversational situational awareness after I'm done, but I'm going back to the earlier conversation of, okay, we don't have to deal with the pattern day trading rule. We can kind of probe markets. Okay, we can throw out one contract or a couple shares just to see what kind of feel we get for the market. So we had NVIDIA. It's ended up trend. And it's money's rotating back into NVIDIA since the situational awareness fund blew up. Kenny G comes in. Ken Griffith comes in, buys the situational awareness book, and since that point, we've had a nice rally in NVIDIA as we go approach earnings. That is the pattern with NVIDIA, that it rallies into earnings over the past year to 2 years, and it has had a nice rally up over the past couple days. I've been buying calls, rolling up those calls, blah, 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 blah. Your head may be spinning as you're listening to me. It's having an intraday pullback here, and it's kind of coming back to a support area that it's kind of had right around the 218.70 level over the past 2 days. We're bullish on NVIDIA, at least I am. It's up 10 cents right now. And because the pattern day trading rule is gone, we can probe markets. Now that is something, that term probing markets is something that I first heard that term from Paul Tudor Jones. He used to go in and he would want to buy, like, let's say 1,000 contracts of the S&Ps or something like that. He'll like come in and buy 2, 3, 4, 5 contracts from one broker, and then 2, 3, 4, 5 contracts from another broker, just to see how it feels. And then if it didn't work, boom, he'd sell them and go back in. So, whatever your regular size is, let's just say your regular size is 10 contracts or 10 shares or whatever it is, go in and buy one contract just to see how it's working, just to see how it feels. And that's what I'm going to do here with NVIDIA. I'm going to go in and I'm just going to buy one contract and just to see how it feels. We got a green bar on the screen, and I like that. That shows that some buyers are coming in after an intraday pullback as we go into the 11 o'clock hour. So I'll show you the contract when I get filled here, everyone. But I'm looking at the August 10th expiration. I'm looking at the 220 calls. Actually, I'm going to go a little further out. I'm looking at the 220, 250 calls. Okay, those are 37 deltas. You may want to do the 220 calls since I'm closer to at the money. Okay, and I'm going to just do one contract. It costs $1.86. That's the mid price. So I'm gonna go in and get filled. And I just got filled on those calls. Now I'll be ready to, if it keeps going up, and I get that those good warm fuzzy feelings, I'll add to those contracts and increase the size. But if NVIDIA kind of meanders down as I continue to talk about Leopold, I'll close the contracts. So let me show you, go to the trade tab here. August 10th expiration. 4 days to go to expiration. I did the 220 250s for $1.78 right here. These are the contracts that I bought. It's just one contract. It's just the base intro position. And I like the way the NASDAQ is acting as well as I'm speaking. It's kind of getting bid up here. It's up now 36 handles. The S&P's up close to 10 handles. You can also buy the 220s. You can buy the 217.50s. Any of these contracts. Go ahead. And that's another thing you can do with options. Okay, so if you can only do one or two contracts, what you can also do, now, and you can do this stuff now because the pattern day trading rule is gone. Let's say you're one contract trader or one or two contract trader. Okay, you can do your regular. You know that your regular position is say 217.50s or the 215 contracts, right? But you want to implement the putting in your feelers. You want to feel around, like Paul Tudor Jones does. Okay, go out of the money. Go buy a contract that's a little cheaper, and just see how the stock acts. See how the contract acts, and if it acts nicely, if it acts proper, if it acts right, and that you make a little bit of money. Then you buy another contract with an option that you like your normal contract, the at the money calls or in the money calls that cost more. And that's another way to get your feelers out. Okay, and you can always just let that small contract that you're testing the waters with expire worthless or whatever. But that's another way to do it. Okay, so you're testing the waters, go out to further out next, far out expiration, and just to see if because that's an option that is way out of the money, that's a cheap option, that will probably expire worthless. The probabilities are that it expires worthless. You know that you would normally buy a 217 option or 215 option, or go further out, and buy another option like this one, like 215 for $7 or something. You can put out your feelers and buy, this option, or the 27 the August 7th expiration. These expire in one day. You can buy this 225, just to put out your feelers, and knowing that it's an out of the money option, knowing that there's time to. Okay, and if that option sticks and it doesn't get any time decay for like a certain period of time, that tells you that the action is good and you should be in it. So I bought that option, and since I bought that option, it's kind of, it's not really, it's down by over 26%. So, the it's not acting right now. That's the market telling me what I need to know. That's the market telling me that NVIDIA is not active, right? And it kind of broke that support that it had over the past two trading days, and now we're below 218 a share. I'm going to give it a little bit more time, but it's the market, telling me, I put out my feelers and it's just not there. So going back to what I was discussing with Leopold, so now the story kind of is developing, and there's an article out by Bloomberg that this guy, Leopold, and he's only like 24, 25 years old. It says in this article that he's back to investing, and he's raised $400 million from outside capital. So after the kid blows up, he goes back and raises $400 million in capital and is now back in investing. It's just nuts. It's nuts. And that's why we come to our screens every day to see this craziness happen. It's just nuts. So after Ken Griffin bought him out over the past, and this is all happened over the past week or so, the kid is gone and then raised a couple $100 million more from outside investors and is back to buying stocks and stuff. NVIDIA is continuing to pull back. So it looks like I'm not getting the confirmation in the tape, and I've lost a little bit of money, and I'm I'm going to give it a little bit more time to see what happens here. But this is like intraday trade, and this shows how you as an individual investor, you're not tied up anymore with this pattern day trading crap, anymore. So you can put out your feelers and see like how the tape actually works, and if you get good confirmation, if the video was up and it was say above 220, I'd be adding to it right now, but it's not. And we go back to that scene from the Wolf of Wall Street. Nobody has a clue what's going to happen. We just have to let the market tell us, kind of give us confirmation or non-confirmation. We kind of have to roll with it, and know that nobody knows crap. We just have to manage our risk. So this option that I bought, it's down 26%. I'm going to give it a little bit more leeway, but very soon I'm going to have to cut the cord. And it is what it is, right? But we started out with small size, putting our feelers out. As you can see here, it's starting to bounce back just as I speak. And taking a look at the NASDAQ in relationship, I like to always look at the Qs, the NASDAQ, along with stocks like NVIDIA, members. All about looking at relationships and getting confirmation, non-confirmation. That's what tape reading is all about. We're getting some nice upward action in NASDAQ here. Other stocks that are acting very well today, or that are up today at least. Microsoft is up 2% today. It's acting very well. SpaceX is up by 2.7%. It's acting decently today. Broadcom is acting pretty well today. So the AI names that were doing really, really well a couple of years ago, you're getting money moving back into them. Amazon has had a nice run recently, and it's up today. Apple's had some decent move. It's other than the sell-off that it had on earnings. If you go back and look further on the chart on Apple, it's been acting very well. And as you can see, it had this big move in earnings, but over the past couple of months, it's had a nice run higher in Apple, and it's up today. So you're getting some nice moves. And as we're speaking, as I'm speaking, and we're still getting Micron bouncing back. It was up earlier when we were looking at it. It was up by $4 or $5, and now it's up by $18, $19. So it's acting very nicely right now. Some other stocks are doing well today. Astera Labs. This is an AI name that I really like. Take a look at the fundamentals of Astera Labs, because it's not a stock that's talked a lot about, but it has had some big moves over the past couple of years. I mean, the stock was at $50 a share a couple years ago, and now it's it has big moves. It has big drawdowns, as you see here, but now the stock's at 380, 338. So I'm very, very bullish on a stock like Astera Labs, and I like how it has bounced off of the 20-day weekly chart, and you have a big sell-off in the oscillators, and they're ready to turn and bounce back. Let's take a look at the fundamentals on Astera Labs here. So you like to use the FinViz platform. As you can see, the stock's had a nice run. When we go look at the fundamentals, it has a PEG ratio of 0.85. We love that. It's got a 62% growth rate for the next 5 years. The growth rate for next year is 61%, and we have a multiple of 53 times earnings. That's cheap. That's fantastic. We love that. Sales is 104% growth rate year over year. And you can see how The stock has gone from negative earnings up to positive earnings, and the sales has gone from 8 cents to $1. Let's take a look at the quarterly numbers. That's just a beautiful, path up like that. We just love that. Stock went from losing a ton to now making a decent amount, and everything looks fantastic with this stock. It has a price to sales ratio of 58 times. That's pretty high by itself. But you look at the sales, and it's growing at 104 times sales. The revenue's growth is 104%. It's okay. And so this is a nice stock that's acting well today. And I love when you have this type of positive earnings and you get some numbskull that downgrades the stock. That's very bullish because you have to think about it. Wall Street, the professionals, they're behind the curve. They don't understand what's going on. And eventually, they're going to have to change their rating to being positive. So I actually think that this is a positive. Someone like a Chris Camillo would agree with me, but a lot of other people think that I'm wrong in this. They totally disagree with me in this regard. But when you have positive earnings, when you have positive sales, you have positive fundamentals, you really like the stock, you like the story, you like the thesis, everything's fantastic, you like the tape action, and they downgrade the stock, that makes you scratch your head a little bit. I like that. A lot of people would disagree with me, but I like it. You can see the stock. It's had a nice pullback, and it's bouncing back. Everything looks great. Let's see here. What else is moving today? Marvell's up today. That's nice. SanDisk is kind of continuing to bounce back. NVIDIA is continuing to pull back. Take a look at the intraday chart with the NVIDIA. So you can see it's pulled back, but now it's starting to bounce back. I'm still long those calls in the video. They're down now 20% since I bought them. They were down 26%, so they've come back a little bit. I'm going to keep them and just see how they act as we go into the lunchtime hour. And if those calls become positive, then I'll add to them for sure. So let's take a look at the intraday on SanDisk. So we looked at this, and it continues to run up. Looked at the intraday on Micron, continues to run up. So that's some decent action. If you want to be bold, you may want to buy some calls there. I mean, I like that action in those stocks. And we were down by a lot in Micron and in SanDisk. And, it's coming back almost green in SanDisk. So maybe I'm talking myself into buying some calls. I don't know. I can't help myself. Right? Let's just do it. Let's just do it. Let's just do it. It's not me. It's the addiction. It's the compulsion. I'm not making this decision. It's you guys that are watching the video and making me do these videos. That's whose fault it is. Not mine. It's not my fault for buying these options. No, it's you. I'm just messing around, but okay. So I'm taking a look at the options here. Micron. Let's first let me pull up the chart, Micron. Okay, so you can see the chart. Then I'll look at the options. Okay. Okay, so they have options that expire in one day. I'm going to go a little further out. They have options that expire August 10th. So August 10th. I like these expiration August 10th. I'll show you the options in a second. This laptop I did my trading on, so I get fills on this laptop. So, okay. So the after monies are 9, 10, 9, 15 calls. I like the 9-10s. Yeah, they're expensive. Let's take a look at the options here. These options are expensive. 4 days to go to expiration, 79% implied volatility. That means these options are expensive when they have an implied volatility of 79%. You go to these after money options are trading for $28, $30. I mean, that's expensive. If you cannot afford that, then you got to do a spread. And so about the 9-10s. So if you can't afford it, you got to do a spread. And that's basically pretty easy to do. Basically, you just go and you do a vertical, and you buy. You say you buy the 9-10s, and you sell maybe like the 9-20s, and it costs you $4.75. And those options, the most you can make is the width of the spread. I'm going to say that again. The most your max profit is the width of the spread, which is $10 in this case, 9.20 minus 9.10. But you pay, say $4, or you're paid for. This is a $10 spread. If you pay less than half the width of the spread, you actually have a positive expectation. So in this example, half the width of the spread is $5. And in this case, you're paying $4.82. That's less than half the width of the spread. That gives you, from a mathematical point of view, a positive expectation. Because the width of the spread is $10. That's the maximum you can make. If you pay $5 for the spread, you're basically a 50-50 bet going from $5 to $10. If you pay less than $5, like in this case, $4.65, that differential between $4.65 and $5, half the width of the spread, $10 divided by 2 is $5. That differential is a mathematical positive expectation. And that, doing stuff like that over and over and over and over and over again until the cows come home, making sure that your system has a positive expectation is how you will be around until the cows come home to trade and be successful. You don't know what trades are going to make money or going to lose money, but if you put out a trade that gives you an edge, a mathematical edge, and then a theoretical edge on top of that, you'll be successful. You'll make money. I know this because I do it. I've seen other people do it. That's how you do it. And in this case, with the spread, the width of the spread is $10. I'm just going to go through the math one more time to make sure everybody gets this, because it can be complicated. I don't think it's complicated because it's basic math, but the way it is, it can be confusing, especially if you're, at your job, busy doing stuff. It can, with all the numbers and stuff, it can get confusing. So we're going to go through this again, just to make sure you guys get the math. Okay. So yeah, the stock is at $908 a share. So we go to the money options, right? Okay. Now we look at the spread here. We buy the 9-10 option. We sell the 9-20 option. Okay. The width of that spread, that is we're buying a vertical call spread. Okay. The width of that spread, we're buying the 9-10, we're selling the 9-20 is $10 because 9-20 that we sell minus 9-10 that we buy is $10. That is the maximum value that the spread could be worth at expiration. Okay. If you think about it, that makes sense because, what you make in one is subtracted from the other, which is the width of the spread. So the value of that spread can be up to $10, which is 920 minus 910. Okay. If you pay over $10, sorry, my bad. If you pay over $5 for that spread, you're giving up your edge. Ken Griffith over at Citadel will sell that spread to you until the cows come home, because if he sells that spread to you over $5 and then hedges it off, a millisecond after, he will make money until the cows come home. But he will do that over and over and over and over and over and over and over again. His algos, the Citadel algos, have that programmed in to do that all day long, and they look for instances in the options marketplace across various stocks to find that situation, and they'll do it. Their algos find those situations, and they do it even if it's just 1 or 2 pennies. But if you pay less than $5, which is half the width of the spread, you have that edge. And if you do it over and over again, buying a spread that is half the width of the spread width, and selling a spread that is more than half the width of the spread width, you do that over and over again, you will have a positive expectation. You will have a mathematical edge. So that is the lesson for today. And successful traders, when you make money consistently, when you get down to it, when you kind of like get down to it, and you really kind of push it to say, what's your secret? What's your secret? They'll all tell you the same thing. They'll say, I don't know anything. I just, it's a numbers game at the end of the day. This is the numbers game. This is what we're talking about. Okay. It's finding those edges. And as I speak now, NVIDIA, let's go back to the conversation we've been having about probing markets and not having to deal with the pattern day trading rule. NVIDIA is really pulling back now. It's at 218, and that option that we bought earlier is bought slightly out of the money, 222.50s. It's now 29%. It's traded at 134 ask, 139 ask, 137 bid. It's down from when I bought it by about 28.5%. I usually order my lunch around 11:30. It's 11:23 now. I'm going to give it like a few more minutes, but if NVIDIA keeps acting like this, I'm going to have to get out of it. I was hoping that I could probe a trade and then add to it if it acted right. But listen, market is what it is, and it's not really it's not really acting right. So I'm gonna keep it for now. Okay, but it's on its road. Down 26% this option. If it goes down over 30%, I'm out of it. I don't care what anybody says. I'm out of the trade. I'm trying to teach everybody here, but I'm also showing that you have to be disciplined, and you have to. The market is what the market is, and if the market is going to not do what you want it to do, you have to dump it. Okay, you have to dump. I don't care what anybody says. There's a lot of other stocks that are acting really nicely today that are kind of taking over from the video. And I think that's I'm kind of watching the tape and see what's going on. It seems like they're selling NVIDIA. They were buying it early this morning. Now they're selling it, and what they're doing is they're buying. They sold, stocks like Micron, and now they're buying that, and that's what's happening. That's what's going on. It seems like. Let's take a look at AMD. It sticks out to me. Yeah, see, even AMD was open down, and now they're buying it. So they're buying stocks like AMD. They're buying stocks like Micron. Jabil Circuits is up 2.6%. They're buying stocks like Jabil Circuits. You know, Stera Labs. It's up. Marvell 2.8%. So yeah, they're selling a stock like NVIDIA, and they're buying the other stocks. Oh, here's another interesting energy AI name, Bloom Energy. I watched this very closely. It opened down. You zoom in here. It opened down. It's gotten bid up, and now it's kind of going back and forth sideways. So a couple of names are going sideways. Bloom Energy is doing that. We looked at AMD doing that a little bit. But still up on the day. Yeah. So, yeah, it's just understanding this rotation that's going on. Oh, Taiwan Semi is up by $8 today, up by 2%. It's open down. Again, open down, getting bid up, and even a little pullback at spot. So that's what's going on right now. Let's go back to NVIDIA, down by $1. So we'll see. Maybe it rotates back into NVIDIA out of stocks like Micron and SanDisk. We'll see. We'll see. But if you're on a fence about a trade, now that you don't have to deal with the pattern day trading rule, it's always okay to kind of probe, go higher out of the money option, and just see what happens. And your main goal isn't to make necessarily money. It's just to see how the option reacts and how it trades. Give you a better feel for what's happening. There's nothing wrong with doing that now, especially because the pattern day trading rule is gone. And the thing is that the brokers actually hated this law because it prohibits a customer like you or me from making multiple trades. Because every time we probe a market, make a small trade, guess what? We're paying commissions, or the brokers making money from selling our order flow. They want us to push the button as often as possible. And I talked to brokers, and they hated that law, and they lobbied for that to go away for years and years and years, and it's finally going away. Let's zoom in here to NVIDIA. See what kind of action here. So it's kind of flattening out here. It's kind of getting a little bit of a bid. I'm going to still hold the option for now. Let's take a look at SMH. SMH. Interesting. So, sold off on SanDisk earnings, and it's getting bid up. It's kind of just traded in a nice bull flag sideways type of action since about 10:10 this morning. I'm a trader friend just texted me. He goes, interesting rollback into memory. So he's obviously seeing this same thing. And I'm going to text him back. Yeah, and out of NVIDIA. So. And that's another key element is to watch the flows throughout the day. Watch the rotation. Watch the relationships between different stocks. See, and try to remember from a day-to-day basis and even intraday basis. And it's a skill. You just have to kind of, it's like, playing the sport or something, you just got to keep doing it. You get better and better at it. I suggest keep a little notebook, especially if you're just starting. You just write it down. And through all of this rotation that we're having, at the end of the day, the market's just pretty flat, not doing anything. This blue line is where we started the trading day, and we are just a little bit below it. We really haven't done anything. And you can take a look at the advanced decline line, and we're just slightly lower today. This is the advanced decline line, and we're down by 194. We really haven't done anything. We're pretty flat on the day. This is not that big of a move. The market's just lots of rotation. All the while, situational awareness is trying to raise capital, get back into the market. Watch them become levered again. So the guy raises $400 million, and it shows how stupid Wall Street is because he got the money, according to Bloomberg, and watch it like get levered up like 3 to 4, or 5 to 1. Just watch it happen. That's like that's the next story. That's the next news that's going to come out that you read on like Bloomberg or Zero Hedge or something. Just watch. And I am going to order my lunch, and let's see here. Let's take a look at this. Let's take a look back at the video. So it just hasn't really done much for now. I am going to hold those calls, but we'll see what happens for the rest of the day. Take care, everyone. We'll talk to you guys later. Adios. Bye-bye.